think asymmetrically, that's better than any asset on the planet, meaning lowest downside, highest upside. There is a 90% correlation throughout all of history in the movements of gold and silver, not always in a symmetrical fashion. Very often, like we're seeing right now, gold goes first, silver on a percentage basis will go further. The pattern that we see technically is as bullish as you can, a long formatting cup and handle formation. You're talking years and years and years. It's about as bullish as it gets. Gold, silver is not a tier one asset, but it's strategic. It's not industrial as they want us to believe. I believe it is strategic. And there is a similar pattern we see in deliveries off of COMEX and the LBMA into strong hands, or deliveries to the COMEX from the LBMA. Right now in China, silver is priced at just a hair under $35 an ounce. It's that arbitrage thing again, where China has increased the premium over London and over New York to try to get as much silver sent over there as possible. At the same time, you have the LBMA, which is trading roughly 2.9 billion ounces of silver per day, 3.5 times annual global mine supply, against a stockpile of about 260 million ounces. You want to talk about a problem? There's your problem. A problem whereby the London Metals Exchange is supposed to be a T+1 exchange, where you get your metal 3 days after you lock it in, the purchase. T is the trade day, +1 is the settlement. The third day, the metal should be on its way to. They're now T+8 weeks, citing a shortage of trucks and manpower, because they understand that this fractional game is coming to an end. And so you remove the ability of these large bullion banks to hold down the price of silver for myriad of reasons. The price really has potential, I think, asymmetrically, that's better than any asset on the planet, meaning lowest downside, highest upside. There is a 90% correlation throughout all of history in the movements of gold and silver, not always in a symmetrical fashion. Very often, like we're seeing right now, gold goes first, silver on a percentage basis will go further. The pattern that we see technically is as bullish as you can, a long formatting cup and handle formation. You're talking years and years and years. It's about as bullish as it gets. So I think with silver, you have to have strong fingertips. You have to be able to deal with the counterintuitive nature of its price performance. But from a standpoint of vested interest of these major institutions for holding down the price, the question is why? Why are they holding down the price? And I think they're losing the game because the rest of the world understands not only what these banks have been doing by suppressing the paper price, but also just the very fact that silver represents much more than it just being an industrial metal. In fact, there are many things that can't be constructed, including high-tech military weapons, without it. And this is probably the reason the military-industrial complex, in my mind, has had a vested interest in doing all they can through a handful of Western commercial banks to hold back the price. But the old adage to me is that you can only suppress or manipulate a price over an extended period of time by pushing in the direction that it is going, John. And the world is wise to the con, and they have been using this suppression as a means to quietly drain the world's exchanges. And there's not much the West can say about it because they're the ones holding back the price. And so it's either, if you can't beat them, join them. And I think the Trump administration understands that. I think that is why they have very quietly since November become a net importer of both metals, because they understand that in the end, he who has the gold, and not just the gold, he who has the commodities, the gold, the silver, and many others like rare earths, we're seeing that now with the tariffs coming back from China, make the rules. And it's easy to play a game of suppression and manipulation and make-believe when, everyone wants our dollars, everyone wants our treasuries, and it's getting past that right now. In fact, I think the dollars, the treasuries, these things have all of a sudden, it's become obvious to many of these countries that the commodities that are valued in dollars are worth far more than the dollars that would be used to purchase them. And this is what we're seeing right now. It's a game that we started and we're being beat by our own rules. It's silver will go higher than anyone thinks possible. but not until it does. And it will, I've always talked about this little by little by little, and then all at once, this logarithmic decay. The little by little has been the accumulation by India importing over almost 900 million ounces over the last 5 years, by China being the second largest producer of silver in the world, and now flying all around Latin America, in particular Peru, and buying up all the doré and the concentrate, which they buy for pennies on the dollar, which they pay more for than the West will, which they send back to China to refine it, disintermediating the market. This is the second largest producer of silver in the world, and they're doing this with Russia now adding it to their strategic stockpile, and now the United States catching on to, hey, maybe we made a mistake. We better continue to use the suppressed price to reshore as much as we can, to deliver as much as we can. And it's getting to the point, John, honest to God, I believe it's getting to the point where too many people understand the game, where before, not only did not enough people understand it, the countries that are now challenging us using this price suppression against us by taking delivery were not coordinated, motivated, sophisticated, or wealthy enough to do it, and they all are now. The game is being rewritten right in front of us, and either you see it or you don't. I'm not talking my book. This is something that is becoming very clear if you have open eyes. I think it's the most undervalued asset on the planet. I think asymmetrically, there's nothing like it. Low downside, high upside. But what's really interesting is while the price took a hit, we're seeing huge deliveries, which we've been talking about for a while, coming from the LBMA into COMEX. And this is not retail flow. It's serious, serious money positioning behind the scenes. Look, silver's still in a structural deficit. And when you talk about solar, electric vehicles, green tech still roaring, let's not forget the military industrial complex and its need for silver. To me, it's a coiled spring. And if it breaks through 30 again and holds, which obviously, where are we today? We're well above 30. So let's see, what are we at here today? Let me look and see. So I know it's a down day today. We have silver at where the gold price, silver price, 32.20. So look, I mean, breaks through 32 and holds, which it has. Look, upside is the upside potential on silver, Jesse, is it's off the charts as far as I'm concerned. And when you see the LBMA at this point having 260 million ounces of silver standing behind what amounts to 2.9 billion ounces in daily trading, 3.5 times annual global mine supply. When you see a situation where the LBMA has gone from T+1 to T+8 weeks, they're being drained. When you see the amount of deliveries coming into COMEX, off the chart deliveries, again, this is not retail. I think silver to me is strategic. It's not industrial, and I think it's an existential threat to some of these big banks who have been doing all they could, let's just say behind the scenes, to position themselves maybe to slowly pull away from these massive leverage short positions. At least the smart ones are, and maybe that's what a lot of these deliveries onto COMEX represent, is the bringing a reshoring of gold to back these leveraged and naked short positions, which very quickly can turn this whole thing upside down. So look, you get through 35 is really what I mean. Then you're off to the races. You can look at 30, you can look at 32. These are certainly numbers that are big round numbers that silver's had a hard time getting through for a long time. But the real number would be to get through 35, and from there it's off to the races. To me, silver is, from a standpoint of risk versus return, I don't know that there's a better place on the planet, honestly. And when you see the amount of deliveries, that signals to me big institutional smart money knows that and is doing all they can with the price in order to reposition into much sounder footing moving ahead.
Yeah, I was actually speaking to David Morgan and Peter Kraut recently on the silver space. They were talking about growing silver deficits the ever rising demand coming from the industrial sector. But they also pointed out that they think investment demand from the retail public will eventually pick up considerably as we see gold keep climbing and people look for a cheaper alternative. People who are looking to perhaps safeguard their wealth are then going to look to silver instead of gold at whatever, $4,000, $3,500 an ounce. What are your thoughts there?
I'm surprised it hasn't happened sooner. And they're both right. Both good buddies of mine and both very, very smart people. And it's true. The retail side of things has been completely and totally left barren by the mainstream. And with gold roaring at all-time highs and silver still only 60% of its all-time high, with the fundamentals that it truly enjoys, yeah, it to me is something that I'm rather surprised has been ignored by well-read, sophisticated traders. That won't last forever. The retail market has, other than the hard asset community, wouldn't know a silver eagle if it fell on their foot collectively. So yeah, I think to not have some exposure to silver right now is a generational mistake. I'm sincere about that. Hope people can sense that.